Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and in this video I'm gonna give you quick fast review of what was the posture from Jerome Powell, Federal Reserve last week, and also what was the impact of the results of the labor market, United States, on equity market, fixed income, currencies, even commodities. We're gonna see the prices, we're gonna see also the comments, and we're gonna see the evolution of those macroeconomical variables that have changed completely the scenario. First of all, I think we should mention initially what was the expectation from the market. We have seen a Federal Reserve since December. It was promising an interest rate cut in 2024. That was what it was causing the drop below 25% on the yields, 2-year bond yields in the United States. But the market was discounted the interest rate cuts by March, which it didn't happen. So by the end of February, the yield was rising and breaking up that barrier of 4.25 to the next top, which was 4.50. This number was there and it was working as a kind of resistance, dropping down and coming back again with every single report. We say every single comment. When Jerome Powell was insisting that the interest rate cut will come in the right moment, they were confident on this, on that. After all, my friends, this week, I'm recording this by the end of the week, so last conference done by Jerome Powell, he actually admit what we have been insisting in these previous reports. If you have seen our previous report, you have been following this report, you know already that we were actually betting and more in the size like deciding that interest rate could can happen, just because the interest rates cannot be cut when the inflation is moving in zigzag. And yes, I say zigzag because the shortest inflation rate registered in the United States recently, it was in June 2023, and since then has been jumping and dropping constantly, never below the levels registered on summer 2023. Therefore, inflation was not dropping, and it was impossible by the Federal Reserve cutting interest rates in that conditions. Jerome Powell finally admit that, and we have seen how the dollar was actually rising. Now we will see how it's dropping back again. And the bonds was rising but dropping again because there is one thing we can see here today, which is by the time I'm recording this video, we got the labor data published by United States. It was rising up by 0.1% from 3.8% to 3.9%, the unemployment rate in the United States. It was also given a non-farm payrolls. Let's see the evolution of all these variables. Non-farm payrolls, it was weaker than expected, which it was 175 versus 238 expected, and 350 on the previous month. So we can see that clearly seems to be a kind of downtrend here on the non-farm payrolls, which finally will indicate that the labor market is getting weaker. Which is more or less what the Federal Reserve needs to justify the interest rate cuts. They do not trust that inflation gonna end in low if unemployment is still strong, because it means like salary is gonna keep pushing inflation up. And we know that because I published and I share with you on social networks the core inflation, showing us that the main support of the core inflation right now is the service sector, which is high use on working labor force. Therefore, only when we see that unemployment rate is rising is when we can truly trust that inflation won't be a problem in the future. The market is celebrating this. As soon as the numbers came out, we seen how the 2-year bond is dropping. It was dropping to those levels, expecting the data, and finally dropping completely. And take a look how interesting is this. When it's crossing 4.70%, the market is pushing back again, which means like more entries are coming to the bond, and therefore once this level is reached, we can see how fixed income market is selling again, and the yield is retracement on those levels. That is in consideration with the non-farm payrolls. Let's take a look also on employment rate, super low anyways, regardless the 3.8 to 3.9, it doesn't mean anything. In November 2023, the unemployment rate was rising to 3.9%, and even then, Cascaris from Federal Reserve, one of the members of Federal Reserve, Cascaris, he also say, calm down, because again, Wall Street was celebrating that number. It was rising, like today is rising again, you see, all of this movement. By then, it was celebrating the number, and Cascaris say, calm down, it's just only 1 month labor report. We need to wait to see what happens next month. And back in November, with that negative labor report, with an increase on unemployment rate, by December, 1 month later, the unemployment rate, it was dropping back again to the previous level, 3.8%. And in any case, everything, absolutely all numbers below 4% are so good in the United States, regardless if it's rising or not. It's still 4%, which is numbers not seen in the United States since 2007. So therefore, we need to wait and we need to see. But today is a new reason to celebrate by Wall Street, because they believe with these numbers rising, the Federal Reserve can be more nice, more kind with the market, and therefore give them what they want to. Average earning per hour, it was dropping to 3.9% growth, still growing, but it was expecting 4% and it's growing 3.9%. Again, we are talking about minimum difference on the margins, and therefore we could expect that the market, macroeconomically speaking, there is not a big difference on this. But again, the expectations by the market are good, and therefore Wall Street is rising back again. We also have made one report talking about the technological sector in the United States and the results from Apple, from Amazon. Apple has been rising amazingly on the market on Friday evening, and based on the results introduced from the Thursday evening. And it was also quoting a very nice supports by then, which are here. And you can see, we also share the chart, and there is a specific report for this. But as you can see, it was very nice support on Apple. And look how nice. We published this chart before the results, indicating that these levels, it was so nice. And obviously, to hold the stock in the portfolio could be a good idea. And this is what it's doing today. So therefore, it's another successful story in our reports. I think that's all in terms of Federal Reserve. Let's take a look. We have seen the fixed income. We have seen the reaction of the bonds. We also have seen the reaction of the equity, which is the SP 500. We can take a look at what's the reaction of the dollar, which is dropping after this report, mainly because it's discounted again that Federal Reserve is not going to be so tough in terms of the inflation. But take a look. Because of that posture from Jerome Powell, dollar was rising back again straight away to 107 points, almost 107 points, which is so interesting also. But now it's dropping, and therefore euro dollar is rising back again. Take a look also on long term. There is nothing to do here. As you can see, obviously the trend is indicating that probably in long term, dollar is going to win the battle against the euro. So do not expect this reaction for a long term. Actually, it's a good opportunity probably for those ones who want to short euro against the dollar, or they want to buy dollar against other currencies. What else? We also can see the gold. And gold is probably reacting positively to these numbers, just because if dollar is getting weaker, gold wants to celebrate this. But as you can see, gold after this massive bull trend is just making a kind of lateral movement, resisting in the 2,230, 2,200 to 2,300 almost dollars per ounce, as you can see here. And again, support levels in $2,200. I think that's all. Oil is still calm, you see, probably indicating what you can recognize by a head shoulder pattern, and still working on make the goal of the pattern, and it's in line with our line resistance supports indicated in previous reports. So everything seems to be going according with the plan. Okay, that's all. I hope you enjoyed the report. Good luck with the market, and also keep in mind, if you want to contact me, you also can find me on X or even to the emails associated with ATFX that we usually leave on the description of this video. Okay, take care and have an amazing week. Bye bye.